Welcome everybody to Crypto Rosetta. My name is Savage. Today we're going to be having a look at Render. Let's get into the charts and see what's going on. Okay, because we don't have all the price history here, we need to just be open to a couple of ideas here. So we need to just be aware that just because we have a low in place here doesn't mean that this needs to hold, and we could still see a move where we actually look to break down. As well as that, when we are measuring to the downside here, we don't know exactly if this is the highest point here. So we need to just be aware of those facts. Now, there's a couple of ways we can look at this. And before going into the micro counting over here, I'm going to discuss some of those higher time frame ideas. So if we are looking for the bullish potential, what we would be arguing within this is there's two ways of looking at this. We can either treat this as 1, 2, 3, 4, 5 as a diagonal pattern, as an expanding diagonal, which is very rare and not as common as the contracting variation. Or alternatively, we could argue we have a series of 1s and 2s building up here, setting us up for a bigger move to the upside. Now, the key thing within this would actually be continuing to maintain these lows. Any kind of a drop below this 089 region would actually invalidate this series of 5-wave moves to the upside. Now, what we'd be looking for here would actually be a bigger continuation to the upside. The blue count would be the most important within this, because this would actually look to push us up into the ranges of this yellow 1618, which is sitting here at this $14 area. Now, the other way we could argue that we're seeing something bullish to the upside would be, like I said, looking at this as 1, 2, 3, 4, 5 as a diagonal. But this becomes an A wave, this becomes a B wave, and then potentially we could just see this play out as a C wave to the upside, in which case this 1-to-1 target's going to be a potential zone. Or alternatively, if this becomes 1 to a third wave target, actually this 2255 level. So we're going to have to keep an eye on this higher area here. If we do see price come into this zone, then potentially what this could mean is that we could actually be looking at a bigger 5-wave structure here developing to the upside. Now, as we have these bullish counts, we also have some bearish counts that are technically still viable. Until we actually break above this high here, we need to be careful of the possibility that this is an A wave, this is a B wave. We could still see a C wave to the downside. So some target areas for this would potentially be this zone of the 0618 to this 1-to-1 here, which is sitting at this 097 region. The 0.618, which would be normally a minimum requirement we're looking for, but in this case, I would really like it to take this A wave low. But technically speaking, if we move down to 618, it could actually be looking to complete as a truncation here. So we're going to be keeping an eye on this. Now, within this count, what we would be saying is that potentially we have a corrective move completed here, where this is W, this is X, this is A, B, C, and that's done. And that could mean that we're starting to build up for this C wave to the downside. Now, this could be a W, X, and a Y. Now, the difference between these two things is that if this is a Y wave, we're going to get 3-wave move to the downside. If this is a C wave, we're going to get 1, 2, 3, 4, and 5, something like this actually developing. So if we are looking for this C wave to actually play out from where we are, we would be looking to actually maintain this high here of this $2.95 and looking for that direct breakdown here to the downside. Now, our typical rejection zone for a B wave is actually this zone here of this 477 to this 145. So we're already well within this. We have actually come up to this 702 here. Now, if we do see price actually look to push up one more time, I would be keeping an eye on these higher levels here, just in case we actually see further continuation up here into one of these higher zones, looking to potentially retest the top of this channel. So that would actually indicate that we are not completed this move yet, and that would mean that we could actually still see a corrective structure like this. If we do look to come down a little bit more and then push up one more time, it's possible that we could actually have this move here as a W. This is an X, so this is a 3-wave move for a Y, another 3-wave move for an X, and then looking for another 3-wave move for this Z wave. Now, the interesting thing here is that if we look at the length of this previous X wave over here, that 1-to-1 would actually bring us here towards this 99-cent region. Now, this would actually align with coming into some of these lows here, as well as looking to target out this 50% level here. So I would be very interested to see how we react around this zone, particularly looking at some of these levels here, where we could look to actually find support here within this area on the fibs, as well as the bottom of this channel. So if we see this move develop in 3-wave structure to the downside, and we look to potentially hold this channel area, what we could then possibly look for is another 3-wave move to the upside. So that's looking at the possibility that we could see this additional leg up here. So the key thing that we are looking at the moment here is the only account here that is looking for that possibility of pretty much getting a direct break to the upside would be that impulse one, where we're looking at this as 1 2 1 2 1 2. The other counts are all looking for a deeper retracement back down into this sort of level here. So it's going to be very important here. If we do manage to maintain some of these key levels, possibly we could look for that continuation, but we need to be careful of that bearish count. And even if we do push up one more time in 3 waves here, we need to just be careful, because that could actually still put us into the higher end of this B wave retracement, which could mean that we could look to actually test out some of these highs over here before looking for that continuation down. So we're going to be monitoring this as time goes by, but in the shorter term, I think it's quite likely that we see a deeper retracement here, but we'll have to see how the waves actually look to form. So we're going to actually come in here now, and we're going to start talking about some of this move to the downside here. Okay, so now the first way I want to talk about this is that if we are looking to break down. So if we are looking at this as a high point that's already completed here, what we could actually have is that we're looking at this as either A to the downside here, this is a B wave up, and then looking for the C wave down. Now the C wave down would actually look to potentially target out this 1-to-1 level, which would be here, this $1.37. We can see this would bring us back into the support area here, and potentially at that 1-to-1 we could look for a turnaround. Now looking at the internals of this move here, if we want to count this as a wave 1, the problem that I have with this is that we'd have to count this as an expanding diagonal, where this is 1 2 3 4 and 5 into this low. So because of this fact, it is already less likely when we have a 5-wave move that doesn't have any overlap in it. There's a lot more confidence within that we could actually see that continuation down. When we get a diagonal like this, it always makes me a bit wary, because it could also just be W, X, and Y and go into this low rather. So we need to just be careful of that idea. But nevertheless, if we do continue to hold this top here, which would actually be this $2.38, which was directly into this golden pocket area here, if we do continue to hold that as a high, we get a 3-wave move up here, and then we see continuation to the downside. What I'll be looking for here is potentially moving into this target area here of this 1618, which is this $1.50 level, which is going to be quite an important psychological level, I think, here, as well as that bringing us back into some of these highs. And if this is a 5-wave structure, what we want to see is 5 waves to the downside here, hitting this 1618, 3 waves up, and then 5 waves to the downside again. Now the target we'd be looking for would be potentially this 144 to this 136 level. Now this would actually align with coming into this 1-to-1, which would be here at this 137 level. So I'm going to be keeping an eye on that if we do look to push down in this way. What we need to be cautious of, however, is that if we do see this structure develop in this way, where this is A, B, and then we get 1, 2, 3, and this 3rd wave starts to extend, and we get a 4th and a 5th, and we actually move down towards this 99-cent region, we need to be very careful that we don't develop an additional 4th and a 5th here, where we could see an additional 4th up towards this 137 level before looking for continuation down here towards this 95-cent to this 84-cent region. Now, if we do see a move like this, where we get a 5-wave structure here, what this can be is, so this move can then either be a C wave, an A wave, or a wave 1. So if it's a C wave, we're looking at this as a flat correction here, and what we are looking for is the fact that this is A, this is B, and then we're looking for this C wave target to the downside. So typically speaking, what we are looking for is an expanding flat, which would be the lower target here of this 85-cent to this 60-cent area. So if we do get this as 1, 2, we get 1, 2, 3, 4, 5, 4, and 5, this could potentially look to bring us down into some of these lower levels here. Now, an interesting area would also be this 1-to-1 if we're going to get a running flat. Obviously, within the internals that we just discussed, that 1-to-1 is not far off of the idea. So 95 to 84 is not too far off of the idea of coming back down into that 1-to-1 zone. So I would be keeping an eye on that if we do look to push down here. Possibly we could just look to push through this channel and then look to actually move back into it. Although we need to be aware that if we are looking at this count, we're treating this as an A wave to the upside here. What we need to be aware of is this whole green support box here could be a potential turnaround. So if we were looking to push down into that 0.618, that would actually be the 60 cents to this 56-cent area. Now, like I said, the internals of this are currently not indicating a move as deep as that, but we would have to watch these, because if we do get extension, then potentially we could actually look to push down deeper. Now, another way of looking at this is that potentially we could argue that this B wave is incomplete, and we could still see a additional push to the upside here. So that means that we could still look for a push higher up into this target box, which is between this $2.68 to this $2.23 level. So if we do see continuation up here, what we could actually see is this whole move actually develop as a W. This is an X, and then looking at this as an A, looking for a B, and then that C to the upside. Now, invalidation of this would actually come by crossing this 185. If we do cross this 185, then that would make this less likely to be a Y wave, and what we'd be looking at is rather that this is possibly A, B, and then we're looking for a C wave to the downside. So we need to be careful of that idea, that if we look to break down in that way, then it's less likely that we're going to see this ABC to the upside. Now, the one-to-one of this is a W wave, is actually here at this $2.58, and then we also do have this area of this 1236, which would be very interesting to me because it would be bringing us back into the range of some of these highs up here. So if we do see something like this, this could align with actually still being within this bigger B wave here. Possibly if we move up towards this higher range, we could look for an interaction with this 854 sitting towards this $2.68 region. Now, if we are looking at this slightly different and we want to say that this is still a B wave, what we could also look at is the potential that within this, we could have this as A, this is A, B, C, D, and then we're looking for this D wave and this E wave as a triangle. Now, the way we would be looking for this to actually unfold here would be treating this as 3 waves to the downside. So what we would want to see is 1, 2, 3, 4, 5, 3 waves up, 1, 2, 3, 4, 5, looking to potentially target out this range here of this $2 to this 194. Now, we don't really want to come down below this 186. This would invalidate the idea of the count as I have it marked out here, but we need to just also be careful because this could just be a different structure here. So if we lose this low point here of this 186, this triangle is invalidated, as well as that if we see a push to the upside past this $2.38. Now, with triangles, we only get confirmation on this D wave. This D wave has to form before we can start looking at this as a primary count. What we want to be looking for is a 3-wave move to the downside here, maintaining this trend line and this B wave here, before looking for an E wave to the upside and then that continuation down. If we did have to come down to this 0.786, which is sitting here at this 194, effectively our target for our E wave would then actually be this 217 to this $2.12 area. Now, what we can see when we get a triangle is this E wave can look to overshoot this area. So if we are looking at a stronger E wave, we might even see this potentially break this C temporarily before actually rejecting and then moving back into the range. So we need to just be on the lookout for this. If we do see 3 waves down and then another 3 waves up, potentially we could look at something like this playing out as a triangle. And the idea with this would actually still be that we are looking to break down for this C wave. The difference is this would actually look to push that that target slightly lower, because our low would be somewhere around this C wave low, which would actually look to push us towards this 133 zone. And then potentially from there, we would have to be on the lookout. The good thing about this is that if we do develop a triangle here, it means that we can't have an impulsive structure to the downside. So that is the bonus of that. If we do actually have a triangle here, what we would be expecting is that we're going to get a 3-wave move down, A, B, and C, and then look for that continuation to the upside here. So that's going to be important within that idea of a retracement here. Now, like I said, the only one that is looking to potentially move up directly would be this wave 2 here. And what we'd be looking for is, even within this, the potential is still here that we could look to push down one more time. And I would say that it would be more likely because this doesn't look like a completed move here. Now, it is possible that we could start to develop something to the upside like this, but at the moment, it is still just looking corrective. And I would still be looking for that idea of this being A, B, and C. Now, the idea within this is that we're looking for a deeper retracement here. And what we would not want to do is lose this 89-cent area. We want to see 3 waves down here where this becomes A, B, C, just like we talked about previously. Now, the idea within this is, we can use all of these counts that we just discussed as possible internals of this structure here. The key thing here is we don't really want to lose this $1.17 area, if we start to break down and consolidate below this level, it starts to become more likely we're going to see price actually move down and take out these lows here. Okay, so having a look at the CPR on the daily, what we can see here is we are actually currently between the central lines here. And if we do continue to maintain these, this can give us the potential to actually see price be gravitated back to the upside here and potentially look to test out this 226, this 236, and even this $2.41. Now, price can move through these levels, so we need to always be aware of that. But if we start to reject down here and start to lose these central CPR lines, what this could mean is we could actually be gravitated towards this $2.05, this $1.95, this $1.90, and this $1.80 level as possible target areas for today. Well, like I said before, you know, price can move through these. So if we're looking at that idea of a direct breakdown here, if we start to get going, we can actually overshoot these. So we need to just keep an eye on them. They're potential pivot points within the market. Now, an interesting zone to me actually lower down here would be where these weekly CPR lines are. So we can see here that throughout this week so far, we've actually come up, we've hit this S1 line, we've actually lost this now, and we're starting to reject off of this. If we do start to break to the downside here, potentially what we could see is a retest of these central CPR lines. Now, if we do manage to hold this level or even push back above this S1, this aligns with the idea that we could push up towards this S2 at this 227, this $2.42 as the S3 line. Now, we are looking for that potential of that downside here. So if we are looking for that possibility of a breakdown here, then what I would be looking for is effectively the idea that we could see price come back to this R1, which is actually aligning with a triple bottom here. So I'd be very interested to see how we react around this level of this $1.87. We have this 173 and this 160 as possible targets to the downside. Now, moving on to the monthly CPR, what we can see here is that we are actually fighting our way inside these central CPR lines now. And if we start to lose these levels, we need to just be cautious because it could be indicating that we could see price get gravitated to the downside. Now, our one line is sitting at this 157 level. We have the R2 line down here towards this $1.11. And then our R3 is actually all the way down here towards this 51 cent. Now, we don't have to hit these targets. These are just potential pivot points. And particularly this lower one here towards this $1.11 would align with the idea of this becoming a bigger ABC pattern. But we'll have to see how we react. As long as we actually are within these, we can continue to bounce around here and range a little bit. And we are also above this central channel line here. So this is also another potential strength for the upside count here where we could look to break out. But like I said, at the moment, there really isn't anything indicating that. If we were looking at the current structure, what I would want to see for more confidence that we're actually going to be breaking to the upside would be first moving above this $2.26. But even then, because of the way the current structure is, I'd probably only be more confident once we start to break this high here and get back above this $2.40 as a potential third wave target, where then you can start to argue that within this count, what we could have is this is a 1, 2, this is 1, 2, 1, 2, 3, 4, 5, 4, and 5, and there would be so on and so forth to the upside, in which case some of these higher targets could then come into play. So the higher targets are this S1 at this $2.64, we have this $3.25, and this $3.71 as potential upside targets for this month. Okay, so I'm going to leave the video there. I hope you found it useful. If you did, please smash the like button, hit that subscribe button if you haven't already, turn on those bell notifications so you never miss a video, and leave us some feedback down below. Also in the description, you'll find a link to the Discord. Come check it out. It is free to join. Everyone have a great day. We'll see you in the next one. Take care.